Hello, everyone. Welcome to Wall Street for Main Street podcast. My name is Mo Daoud, and today's special guest is Chris Nelder. He's an energy analyst and consultant who has written about energy and investing for more than a decade. He's an author of 2 books on energy and investing, Profit from the Peak and Investing in Renewable Energies. Chris, thank you for joining us.
My pleasure.
All right, Chris. The first question has to do with news I read today. I recently read China has overtaken the U.S. For the world's largest importer of our net importer of oil. What are your thoughts on the China overtaking U.S. as the world's largest net importer of oil?
Actually, I think that's in gross terms. I think China simply imports more oil than the U.S. does. This is something that we've been watching for several years now. Thought it might actually happen in the fourth quarter of last year, but it's no surprise that it's happened now. The trends were very clear that would happen eventually. China is actually, has just got a lot more people than we do in the United States, 4 to 5 times as many people, depending on whose numbers you use. They're rapidly, increasing in terms of wealth per capita, and they're buying cars for the first time. Many of them, a lot of those, most of those cars are far more efficient than the vehicles we're buying here. Certainly a lot more efficient than the majority of vehicles we have on the road here. So, they're able to buy oil at prices that the U.S. Will shy away from in the future. China's increased oil consumption since 2005, well, really China and India combined, their increased oil demand since 2005 has pretty much barrel for barrel been made up for by a loss of demand in the U.S. and Europe. So these are long-term trends that we've seen developing over a period of nearly a decade now, and I fully expect them to continue that way, even as prices rise to the point where U.S. consumers find oil unaffordable. They'll still be outbidding us for it because they're simply driving so much more efficient vehicles, and because in many ways they get a lot more marginal utility out of a gallon of fuel than we do.
Yeah, I agree with you there, with China moving toward becoming more consumer-based economies, as well as still being a manufacturing country as well, and also a lot of people are moving from the rural area to the urban areas, and also the real estate market over there is just taken off. So it's no surprise that the energy consumption there has really taken off and surpassed the U.S. economy and become #1 importer of oil. So talking about the supply or the demand for oil and looking at the price of oil since the 2008 market crash, where oil was around 140, the price of oil had been in a trading range, mainly between 110 and about $75, and has been continuing to do that for the past couple of years. But yet we're still seeing increasing demand for oil globally. Why hasn't the price taken off when the demand continued to rise year after year?
Why haven't U.S. oil prices continued to rise?
Yes.
Okay, because obviously the global benchmarks, particularly Brent, has been about $10 a barrel more than the U.S. For years now. I've explained this narrow trading range that oil's been in for the last few years in a model I first put out in, I think, 2011. Maybe it was 2012, my model of oil prices, where I call it, the narrow ledge, a phrase actually that I borrowed from analyst Stephen Kopitz. Basically we've been stuck in this range because oil has a very firm price floor that it needs in order to be able to produce more oil in the future. $75 a barrel is absolute rock bottom pricing for what it takes to produce new oil in the U.S. The real all-in cost of putting another barrel of production capacity online today is more like $100 when you consider all the costs, including financing, the cost of capital, risk, midstream development, and all that sort of stuff. So I think we've been in this range because at the bottom, prices can't go any lower without destroying supply. And then at the high end of that range, that's where we start to run into demand destruction in the U.S. When gasoline gets to about $4 a gallon in places like New York and California, we start seeing people just not burning it as much because they just can't afford it. So we've had this narrow range because, the price has to be high enough to bring a new barrel of capacity online, but not so high that it kills demand. And it was my call several years ago that we would stay in that trading range until roughly the end of this year, or potentially the first part of 2015. That's still my call. At that point, I think we're going to see another leg of repricing higher for oil because at this point we've already seen that current prices are not really high enough to keep the U.S. tight oil boom going at the rates it has been going at for the last few years. Oil needs to be priced even higher. And we've seen just in the last 6 months or so a number of major oil company executives make that very same statement, saying, yeah, well, we really need $100 a barrel. I mean, that's what the Chevron CEO said a couple weeks ago. And then in Europe, prices are a little higher. They're more linked to the world market with the Brent benchmark. The U.S. prices are a little bit lower than that because we've still got a bit of a glut at the Cushing delivery point in Oklahoma, thanks to the tight oil boom. And this is why we've now seen new calls for oil exports. They'll give you a lot of reasons. Everything from, it's just better to have open markets to, we're going to use this as an oil weapon against Putin or whatever. All of that is nonsense. The simple fact is that in order to keep the U.S. tight oil boom going, they need higher prices. They can't do that with the U.S. market being the way it is, so they're looking for exports so they can fetch higher prices. So that's the situation we're in with this kind of narrow pricing range for oil, and I think we'll be there again for another 12 months or so, maybe less, and then oil's going to have to start moving up again.
Now, my question is you talk about exports. Right now, it's well known that Europe is dependent on Putin for natural gas and a lot of fuels. Do you think this Ukraine and Crimea crisis will be used as an excuse to finally sell the idea to the American people on energy and national security to export oil and gas? Because we know politically it's probably not going to be popular because Americans don't want to pay higher prices at the pump or on their utilities.
Well, I mean, the industry and its representatives in Congress are certainly doing everything they can to make that case, but it's silly. I mean, this is just another never let a good crisis go to waste. This is a transparently cynical effort to use a very short-term situation on the other side of the world as one more reason to try to open up U.S. oil and gas exports. Now, we could begin oil exports today. We have the infrastructure in place to do that, but it would definitely result in higher prices for the U.S. consumer, and I rather doubt that U.S. consumers are interested in paying more for gasoline and diesel with the uncertain prospect that somehow that's going to scare Vladimir Putin when Russia is, the world's number 2 energy exporter. So No, I think that's just nonsense. And then as far as shale gas goes, or exporting LNG, the first exports of LNG from the U.S. are currently expected to be in late 2015. That's from the Sabine Pass facility that's being constructed in Louisiana. We'll see if that project comes online on time. And I would imagine the first cargoes are going to be pretty small, in terms of their overall export volumes. Most of their export contracts are already tied up with specific customers in mind. Those exports are going to go to Asia. They're not going to go to Ukraine. They're not going to go to Europe because Asia pays more for them. So. This is private industry we're talking about. The U.S. government doesn't tell LNG exporters where to send its gas. They're participating on a global market, and it's a private sector market. So no, I don't see the case for U.S. oil and gas exports being a tool against Putin at all. Not in the near term, not even several years from now. Particularly when you really understand the numbers. Russia has so much more gas. They export vast volumes of it. This is a very global market. Whatever gas exports or oil exports we do, unless it's in unbelievably large quantities, would have very little effect on the economics of Russia's oil and gas income. And even so, there's an even more fundamental reason why it doesn't make any sense. The U.S. is still a net importer of oil and natural gas. If you're a net importer, how do you suddenly come up with millions of barrels a day or billions of cubic feet per day of gas to export as some kind of a weapon? I mean, you have to import it then from somewhere else. It just doesn't make any sense.
And plus, with the brutal winter that the U.S. had and the big drawdown we had in the natural gas, I don't see how they're going to start exporting natural gas anytime soon when you look at that as well.
Well, yes. I mean, that's a much more local thing. There was definitely concerns about gas storage being adequate in the Northeast with this really brutal winter that they've had in the Northeast. Other parts of the country, not so much concern. And in over time, that problem can be cured by building more storage capacity. But I think that what the U.S. really needs to be thinking about is what is the long-term future of shale gas and tight oil. And we've been given a very, very Pollyannish story about that by the oil and gas industry and by their friends in the banking business and in the political sector. But the most transparent models that I've seen suggest that both tight oil and shale gas production will be back in decline before 2020 in the United States. So to me, it makes a lot more sense to think about the long term, to think about stewarding our own resources for the best long-term prosperity of the country, and forget about exports.
So, staying on the topic of Russia, and talk about the petrodollar as well. A lot of the oil-producing countries, such as Iran and Russia, are starting to sell oil using other currencies than hard assets, such as gold and other currencies around the world. Do you believe this is the end of the petrodollar when you see countries like Iran and Russia starting to look at other currencies when they sell their oil?
Well, I don't know. I mean, it's a very difficult question. Something obviously we've been thinking about for a long time. People have been saying that there's going to be an end to the petrodollar for years, and So far, there hasn't been a really substantial change in the U.S. dollar role in global oil trade. I think eventually that could be the case, that the U.S. dollar will not be so important as the global currency of the oil trade. But I don't see any near-term risk of that really being a major concern.
All right, I want to switch topics. You talked about alternative energy before we got on, and the future. I have a question. What types of alternative energy do you think will, over time, take place or might rise to be a big player in the energy industry?
Well, obviously, wind and solar are the main renewable energy sources that are really growing right now. Posting 20-30% per year growth rates. And I expect that to continue to be the case for quite a few years to come. We'll see when we get out to the mid-2020s how much of a growth rate they can sustain, how much grid penetration they can achieve. And a lot of that will depend on what happens in the grid sector. There's a lot of transformation that's already happening in the grid sector, and there's a lot more that needs to be done. But I think, so for the near term, let's say for the next decade or so, I think wind and solar are still going to be the predominant forms of renewable energy. In time, I think actually geothermal energy has a lot of growth potential, and even farther in the distance, eventually I think we're going to really figure out what to do with marine energy. Still a very difficult technology, very expensive. I wouldn't say that it's anywhere near ready for prime time, but the amount of energy that's available there is vast, and like anything, give it 10 or 20 years of serious technology development. I have confidence that they'll figure something out. But in the meantime, it's, in terms of renewable energy, I think it's really about wind and solar. I don't think there's much growth potential at all for hydro. I mean, in places that have very little hydro, in Asia, in Africa, there's probably some room to put some new hydro in. But I don't think it's going to be a real growth sector. What's really kind of more interesting to me in the next couple of decades is what happens to the grid power industry. It's not really just a matter of swapping out renewable energy for fossil energy. There's so much more that's going on in terms of demand response, load shifting, various storage technologies, lots of business model innovation. There's just a lot of disruption that's already happening in the grid power sector, and there's going to be a lot more to come. I mean, in much of the U.S., you have solar power at less than 1% of total electricity generation, and the utilities are already screaming about how it's going to, destroy their business models, and how it's inflicting an unfair proportion of grid and transmission maintenance costs onto non-solar users. Well, when you've got that kind of screaming and upset going on, when you're talking about an energy source that's less than 1% of the mix, but that's growing at 30% per year, you have to ask yourself, okay, where's this really going? And we've seen some very interesting suggestions lately that ultimately a lot of people could just disconnect from the grid. They'll just they'll go off grid with solar and on-site storage, or potentially on-site generation using like a residential scale natural gas generator. And I think there's a lot of change that's happening in that sector.
And also the power grid in this country, the infrastructure is old and outdated, and the grid is basically being held together using bubble gum and paperclip. I mean, not really, but just to use a metaphor to show how weak it is. And also there was a report out that came out, or article came out a couple weeks ago saying that a couple small terror attacks on the grid, and we could have a power outage that would last for over a year. And that showed you how bad the infrastructure for the power grids are.
Oh no, that's absolutely right. I mean, the grid itself is incredibly antiquated. It's so out of date. It's just not even funny. There's parts of it that are just no intelligence, no electronic intelligence at all in it. There are still utilities out there that are still keeping track of their customers and the condition of their equipment using paper records. I mean, they're not even they don't even have electronic data yet. So there's a lot of evolution that will happen in the grid sector, and I think a lot of that is just going to be driven by the influx of especially distributed solar capacity on the roofs of homes and businesses. It's going to force the utilities to put more smart meters into place so they can accurately measure and bill and monitor those generators. And I think that in time it will sort of bubble up and get, we're going to have to rebuild much of the grid anyway just because it's so old, and we're obviously not going to replace what we have with 50, 60, 70-year-old technology. We're going to replace it with smart grid technology because there's just so many reasons and advantages to doing that. So, there's going to be a lot of redevelopment of the grid. Like the rest of the nation's infrastructure, we don't really have a choice. We have to rebuild it.
I agree with you there. Go ahead, John. You have
No, you can go ahead.
All right. I want to stick to the subject of solar panels. Now, the great thing about the price of solar panels lately is it's been dropping. It had dropped 60% since 2011. And also the cost of installing them has dropped. And I read an article saying it costs about the same as a coal power plant cost to build. So do you believe that will make coal absolute in the future now that the price of solar panels have dropped?
I'm sorry. Say that again. You're breaking up a bit there.
I'm sorry. So I just wanted to ask you, do you think coal will be outdated or no longer needed to produce now that the cost to install solar panels had dropped for the past couple years?
I rather than putting it in absolute terms like that, I would say that renewable energy and in the U.S., cheap natural gas is already pushing coal power off the grid. It's kind of a different situation in certain countries in Europe. It depends on where you're talking about. But in the U.S., it's getting very difficult to make even an existing coal-fired plant pay off because in places where there's a lot of solar, for example, the most profitable kilowatt hour is the one you produce in the middle of the day when rates are highest. Well, that's when solar is pumping out energy, and in some cases, in certain parts of the country, we're even seeing times where midday power prices can go negative. So that's not the reality that the coal plants were counting on when they were built. And now when they're having to ramp up and down and accommodate renewable energy, which gets priority dispatch, it's becoming very difficult for them to function. The economics are just not working for them. So I think what we're seeing, we're already seeing coal being pushed off the grid in some places. A lot of the big bank analysts and various green tech analysts believe that by 2020, renewable energy, solar and wind, are going to be the cheapest way to put up a new kilowatt of generating capacity, even cheaper than coal in about 3/4 of the world. So that being the case, I've actually argued that we've crossed a tipping point where there will be no turning back. Coal is never going to get cheaper. It's just going to get more expensive. And renewable energy is going to continue to get cheaper. And we've passed, I think, that tipping point where gradually, over the course of decades, I think we're going to see coal pushed off the grid.
All right, I want to switch topics to one is nuclear power. That's gotten a lot of bad press. What do you see? Yet there's a lot of nuclear power plants coming online in China, in Russia. What do you see for the future of nuclear?
Well, in the free world, let's put it that way, nuclear power has just simply become too expensive. The economics of nuclear power are already not working out in the United States. We've seen an enormous number of nuclear power plants, whose costs were recovered decades ago in some cases, now, being closed because they just can't afford to refurbish them or to repair them, to keep them running. So that's already happening in the U.S. We're already seeing the nuclear sector shrinking, and that's been going on for several years. Take a look at what's happening in the U.K. They just signed a deal for, one of the first new reactors in a very long time at, whatever it was, 92 pounds per megawatt hour, inflation adjusted for 25 years or whatever it was. Well, that's double the grid price of power today. So, that just doesn't work, especially when you're at the same time putting in wind and solar, gigawatts per year at half that price. And that reactor wouldn't be online for, years from now. I won't say when, because as far as I know, no reactor has actually been built on schedule and on budget in decades. They're always over schedule by usually years and over budget by a factor of 2 or more. So, who knows if that Hinkley Point C plant is ever actually going to be built. Russia and China, it's kind of a different deal. You've got a state-controlled industry there, and they can decide to do whatever they want to do. They don't have to rely on private enterprise to make it happen. They don't have to make a profit on it. They can, fund it at the sovereign level. So that's kind of a different matter. But I think in the parts of the world where you've got where generators actually have to make a profit and do what they need to do according to the normal rules of the market, I think I don't think there's a future for nuclear power.
And that's a great point. And I think nuclear energy is going to be a big player in the future, a big part of the energy market. And we're seeing increasing demand for uranium in countries like China and Saudi Arabia, and other parts of the world. So I think the use of nuclear power is here to stay, despite what happened in Japan and the earthquake and the radiation.
Yeah, no, that's right. I was just talking about the economics of it, but certainly the politics of it and the environmental concerns are not a help either.
And I agree with you there. So, Chris, thank you for coming on the Wall Street for Main Street podcast. If people want to find out more about your work and what you do, where can they go?
I post all of my work to my blog, getreallist.com.
Okay, great. Well, thank you for your time, and hopefully you can come back on again.
My pleasure, guys.